Biden has proposed a $2 trillion spending bill. Unlike his past $1 trillion-plus bill, this one will not be entirely deficit financed. So where's the money going to come from? President Biden has proposed a number of different corporate tax increases intending to raise revenue and intended to undo one of President Trump's biggest legislative victories. First, he simply wants to increase the statutory corporate tax rate from 21% to 28%. Under President Obama, the tax rate was 35%, and President Trump lowered it to 21%. However, the compromiser, President Biden, wants to set it at 28%. The 28% tax rate would be one of the highest statutory corporate tax rate among developed countries, including higher than Australia, Belgium, Canada, Denmark, Estonia, Finland, Germany, Greece, Iceland, Ireland, Israel, Italy, Japan, Korea, Latvia, Lithuania. You get the point. Corporate tax rate would be the highest among the OECD nations. President Biden also wants to change a number of provisions dealing with how multinational income is taxed to U.S. corporations, all of which would increase the tax burden U.S. firms face and put us more out of line with international standards. Finally, President Biden is also proposing a 15% minimum tax on financial accounting income. Corporations prepare financial accounting earnings numbers to report to investors, and taxable income to report to the Internal Revenue Service. Congress writes the laws that define taxable income, and over the past decades has legislated a tax code that produces tax liabilities that President Biden and other Democrats are unhappy with. Rather than fix the tax code they legislated, they intend to tax financial accounting income. In my opinion, just as Congress writing the tax code broke the tax code as it fell victim to perverse political incentives, taxing financial income will break the financial accounting system, making it more difficult to figure out how successful companies really are. President Biden is suggesting other ways to pay for this $2 trillion spending bill as well. But these three are some of the biggest revenue raisers: increasing the statutory corporate tax rate, changing the rules for U.S. multinationals, and taxing financial accounting income.